Welcome back. Hovering around 18,600 on the Nifty. This is a momentous day for our markets. The benchmark indices have scaled record levels after a gap of more than 400 days. So after a long period of consolidation, the markets are back to its all-time high levels. Midcaps are doing well. The Midcap index is up 0.6%. But in that, let's tell you what's on our Midcap Spotlight today. Vivek is joining us, and he's watching out for Va Tech Wabag. Vivek, why is that?
Well, good afternoon. That's right. So Va Tech Wabag today is in focus. So what's actually the company has done? Two important developments, and Nomura also has reacted to these important developments that the company has informed. So the first thing, of course, the company has managed to go ahead and secure long-term financing, and this is a 2,000 crore working capital loan from Asian Development Bank that the company has spoken about. Now, the loan tenure is of 63 months, and what analysts have indicated that these are at very reasonable terms. So that is one positive development that the company is enjoying. Second thing, what actually happened as far as Q1 and Q2 was concerned was the fact that the company had indicated that it had a significant Russian project, worth over 1,000 crores, and this particular project was stalled because of the geopolitical developments that happened in that particular part of the world. However, what we now understand is that this particular project has resumed execution, and the company has managed to establish payment mechanism in US dollars, and this particular project is exempt from any global sanctions on Russia. So Nomura has reacted on this particular development. They have retained their buy stance. They've raised the target price on the stock to 480 rupees a share. And what is it that they're saying? They're saying that the first half of FY23, the company actually saw the impact of some developments like the commodity price rise, especially steel. And this was something that the company saw impacting its EBITDA margin in an adverse manner. However, they believe that some of these negative tailwinds that the company actually saw is now turning positive, and which is why they've continued to maintain their buy stance on the stock.
All right, Vivek, thank you so much for joining us. Well, IPO season continues, and today we are going to be talking about Dharmaj IPO. Now, remember, it has received 0.6 times subscription so far in the day. To give you a sense of what the company really does, well, the total issue size is 251 crore rupees, out of which offer for sale is 35 crore rupees and fresh issue is 216 crore rupees. The usage of the fresh issue will be for funding working capital requirements. The company will also be using it for general corporate purposes and upgrading and expanding current facilities of the company. It is an agrochemical company and is into manufacturing, distributing and marketing of herbicides, insecticides, microfertilizers and antibiotics as well. And it caters to both the segments, be it the B2B segments and the B2C segment as well. It exports also to a lot of countries. It exports to more than 25 countries like Latin America, East African countries, Middle East and Far East Asia as well. If we talk about the revenues of the company now, it has been consistently doing well. From levels of 200 crore rupees in FY20, it has gone to levels of 394 crore rupees, almost doubled in FY22. The EBITDA margins has improved as well from 9% in FY22 to 12.2% in 3 months of FY23, that is. And profits at that 18 crore mark is something which is more than what we saw, is more than half of what we saw in FY22 as well. So good financial performance by the company as well. If we talk about the valuations now, it is coming in at 27.9 times, that is FY22 earnings, which is in line with the agrochemical major, that is Rallis. So it is actually on the higher side as far as the sector average is concerned. India Pesticides is around 18.5 times, Hiranba around 10.8 times, Bharat Rasayan at around 24 times. So it is largely more on the expensive side. One of the risks that the company has mentioned in its DRHP is that lenders have imposed certain restrictive conditions on their financing arrangements, and they have enlisted that as well on a debt of around 66 crore rupees. So that is something we'll need more answers to. But good financial performance, and we are talking about not reasonable, but slightly expensive valuations as well for this company. So yes, 0.5 times is the subscription so far. Let's see what happens in the next 2 days.
Absolutely. Margins for the company have been improving, as you pointed out, right? In FY20, it was 9%. In FY21, it was 10.3%. In FY22, it was 11.1%, which has further increased to 12.2% in Q1 of FY23. That's not in rupees crore, that's actually in a percentage term for the operating profit margin. We'll wrap up on Midcap Radar. Thank you very much for joining in. We've got Inside Out.
Yes, Inside Out when we return, so stay tuned.